Hello there folks, welcome into today's video. I got a lot of very important things to show you and go through in this video here today. We have some very bad news to get to, and we have some very good news to get to. And right now we're in the month of November, obviously, and it's what I call this month the setup for 2023. And there's certain things that are setting up for 2023 that are really, really bad, and there's certain things that are setting up for companies that are really, really good. And what you're going to see in 2023 is a massive divergence between stocks that will continue to get hammered and their business models will actually get considerably worse in 2023, and companies that are going to thrive in 2023, and their stock prices will appreciate greatly, their revenues will increase greatly, their margins and their cash flows will increase greatly in 2023, regardless of the economic environment. I'll show you the reasons why in this video here today. So hope you guys enjoy this. As always, I appreciate each and every one of you that are subscribed to the channel and always come watch the videos. And by the way, rattlesnake in the garage right now. These babies, they get in that garage. Oh my goodness, man. So scary, but not as scary as this. Amazon is said to plan to lay off about 10,000 employees here, okay? Now, I heard some people pitching this as like, oh, it's not that much. You know, Amazon has over 1 million employees. 10,000 doesn't sound like much. From my understanding, these 10,000 employees are more in the corporate realm. So they're not like the people that are at the warehouses, like picking items and stuff like that, which is, you know, a very common Amazon job. These are likely people that are making, let's call it 70,000 and up a year. Probably a lot of them making 100,000 plus a year. Probably a decent amount of them that make six figures. And so what we're kind of seeing in the job market is definitely a divergence between like the, let's call it the $40,000 to $70,000 type jobs and the, you know, 70,000 and up type jobs. And so far as most job losses, it's mostly been what's called it's basically called white collar jobs, right? More corporate type jobs. And that's where we're seeing the real weakness right now. But I'm not so sure that's going to be all we're going to see in this whole situation in 2023. And I'll get into that in just a moment. This obviously comes after Meta announced that they're going to lay off about 11,000 employees, which was a huge number for a company like Meta. On November 7th, Zendesk, who's not even a big company, they announced they're going to cut about 5% of their workforce. On November 4th, Twitter announced they're going to cut like half their workforce. Like Elon just went in there and just like almost fired everybody. It's like, everybody out. You're all done. You're all out. I mean, that's just insane, right? Opendoor basically cut about 18% of their workforce. And then, less than a month ago, Zillow cut around 300 jobs. So that left the company with about 5,000 employees there. And so what we're seeing across many in tech right now is just job losses, job cuts, and just an overall weakness in that workforce. Now, do keep in mind with all these companies cutting, and I wouldn't be surprised if you see some more cuts from these companies in 2023 that will alleviate a lot of the cost pressures many of the big tech companies have been going through, because many of these big tech companies, basically to even get people to work for them, they've had to pay top dollar. And I mean like top dollar just to get people to even, think about working for their companies and throw away, give them tons of options and all these things. I think a lot of that's going to likely slow in a pretty substantial way, if not come to a grinding halt in 2023 nonetheless, okay? Now, this is extremely important because what you see from like 10,000 jobs cut at Amazon, 11,000 jobs cut at Meta, those type of decisions, you got to understand those are unfortunately just the start of things. And you got to understand where a lot of these jobs come from in the economy and how much worse it's going to get when it comes to job losses, okay? And this is very important for everybody watching this to understand this, okay? So what you're looking at here, there's a number of employees roughly in the construction industry. And this was as of September. I think it's even a little bit of a higher number as of right now. Now, what we're going to go into in 2023 and maybe even potentially into 2024, in my personal opinion, is we're going to see construction start to dry up massively. I'm talking warehouses being built. I'm talking new homes being built. I'm talking new apartments being built, new condos. I'm talking, just random projects, all this stuff. And I've been speaking about this. And I think as 2023 goes along, you're going to see a lot of these projects finish up. And then the workers aren't going to have the next job. When that massive home development is finished in 2023, it's not going to be the next massive home development to basically just, we're going to build a ton more homes now, because there's not going to be the demand for it because of obviously 30-year interest rates. Plus we have a weakening economy, plus consumer confidence on the floor. There's a whole host of reasons why things are going to dry up massively there. And when you're talking about a field like that, you're talking about, millions and millions and millions of jobs could potentially be lost in late 2023 and into, potentially even 2024 unless the Fed pivots really, really quickly and drops the Fed funds rate back down to zero. And it doesn't seem like that's that much of a realistic possibility as of right now. And you got to understand, when we go into this situation, you're going to see, as far as construction jobs, you're going to see them go down to maybe 5 million or 6 million jobs. And, right now we're pushing up, getting close to 8 million jobs in the construction field. So I wouldn't be surprised if we lose 1 to 2 million jobs in the construction field from mid 2023 through mid 2024. And that's when you're talking about massive amounts of jobs. And once again, when those folks go out of work, it creates obviously a hardship on those folks, and then trying to find another job. And you got to understand, when you have this massive contraction in all construction jobs, it's good luck trying to find another job. And that's a really tough thing. And then we'll go through a year or two, if not 3 years, of a very slow construction environment. The good news is, regardless of the economy, there's always construction needed, right? There's always government jobs out there. There's always some private sector jobs. So regardless of, whatever happens there's still going to be millions of jobs in the construction field. But the problem is, there's going to be millions of job losses likely. And that's very unfortunate. And that's where the big numbers come from, okay? But that's also just the tip of the iceberg in this whole situation. What you're looking at now, and this is extremely important, this is manufacturing jobs in the United States of America. And there's around roughly 13 million manufacturing jobs in the United States of America, okay? Now, think about anything being built, okay? I don't care if you're talking about a warehouse. I don't care if you're talking about new offices, new office buildings being built. I don't care if you're talking about new apartments or condos or homes. There's so many people that make money off that, and so many manufacturing companies, right? The thing about a house being built, you need all the doors, you need the windows, you need all this just random stuff, right? You need lights, you need ovens, you need cabinets. It's incredible. And so when all these new things are being built, obviously the construction field has been wild because of, obviously there was cheap money out there. You could get anything you wanted pretty much as far as cheap money, right? And then on top of that, we had an expanding economy. So it created this overwhelming demand of construction. That's why you see all these projects when you drive around your city. You see, building going on everywhere. And it's really exciting, but unfortunately it's going to, come to a standstill. And so all these manufacturing jobs are basically, these items that go into the warehouses, the homes, the offices, the apartment buildings, or whatever's being built, okay? But what we're going to see is likely a massive contraction in this as well. And it's likely going to be also in, unfortunately, the millions of jobs. And I would say if we only lose 2 million, that might be best case scenario on this. I'll give you a good example. In Arizona, actually, where I'm at right now, there's a massive facility for Sub-Zero, Wolf appliances, those sorts of things, right? And obviously their business has been in a pretty good spot over the past, several years, with obviously housing being pretty darn good. And so naturally their business is going to do very well. There's going to be a lot of jobs created there, right? You have about I think it's around 700,000 people, or excuse me, not 700,000 people, 700,000 square foot facility. And from my understanding, there's 1,000 people. Well, think about it. If we're talking about a massive real estate slowdown and a massive contraction in spending, right? Do you think they're going to need all those workers by the end of 2023 and going into 2024 if we're talking about, home demand start drying up in a massive way? No, they're not. And so likely there's going to be job losses there, right? That's just one little example of what you're going to see across the board. Because when you dry up all the construction, as we're going to basically do in 2023 as the year goes along, you're going to dry up the demand for manufacturing all these different things that go into all these massive amounts of construction buildings that are going on right now, right? And so that creates a very, very tough dynamic that unfortunately it's going to play out. It's just a question of how bad does it get, right? And to give you some impact, they've done studies on roughly how many jobs is created from doing a certain thing, right? Because it can get rather confusing. Let's say you build a home. There's a new home being built, right? And I'm sure around your city you see new homes being built all over the place. so many people work on that home. So it starts to get confusing about like how many jobs to just building one home, how many jobs does that create, right? Because there's so many people that they might work on it for a week or a month or a day or something like that, right? And you got the plumbers, you got the electricians, you got the people that are doing the roof and the siding and all the different fields, right? And the window people and blah, blah, blah. So it creates an immense amount of jobs, but it's hard to figure out, does this create like 10 jobs, 1 job, 0.5 jobs? How many does it create? So they've done studies basically, and what they found is by one home being built, a single family home, just an average single family home, it creates about almost 3 full-time equivalent jobs. Almost 3, okay? So what that tells you, if there's a massive slowdown in new homes being built, that's going to mean there's going to be massive amounts of jobs being lost because each one home creates about 3 jobs, okay? For every one little apartment being built, it creates about 1.25 equivalent jobs. Now, obviously, an entire apartment complex creates, way more than one. We're just talking about an actual little individual each apartment, right? So if you want to, say there's an apartment building being built that is going to house 100 people, obviously the number is much, much bigger than 1.25. You can go ahead and do the math on that, okay? So nonetheless, if we're talking about this, you're talking about mass amounts of jobs being lost. Never mind, once again, all the warehouses being built, all the offices being built, all the new stores being built, all that stuff, right? And as that dries up more and more and more, you're going to see obviously massive amounts of jobs being lost. And that's very, very devastating to the economy because then those folks are out of work and then they're not spending as much in the economy. Plus, it's just an overall just like doom and gloom kind of on the economy and things like that, okay? So that's the bad part of this, okay? We'll get to the good part for other companies here in just a moment, but that's the bad news there, and that's unfortunately what we have, the sad reality that is coming here in this situation, okay? Now, in regards to the stocks today, and then I'll get to the good news in just a moment here, it was very much a mixed bag day out there. You can pull up a heat map and basically see that, you got some red, you got some green, very, very mixed bag day out there today in the market. Something I saw that is great news is commodities. Commodities continue to be in a tougher and tougher place. You saw WTI down 4% here today, lumber down big again, copper down, the overall commodity index in general down today. So that's something that's definitely good news, okay? Look at lumber. Lumber's now lower today than it was 5 years ago. Think about that for a moment, let that sit in. It's lower today than it was 5 years ago. No, lumber obviously went to insane levels. And that was obviously unnatural and that had to come down. But, I think part of the reason lumber went like that is because all the construction that all of a sudden happened out of nowhere. And, so naturally the price of lumber went to the moon. And obviously it's the come down of that. And I think this is also basically kind of telling you where the residential market's going to go. And I wouldn't be surprised if lumber actually goes considerably lower and it maybe goes to a 10-year low or a 15-year low over the next few months. I wouldn't be surprised at all, okay? You look at something like oat futures. This is something that went insane. And this killed, this hurts obviously people's pockets, right? All these commodities go insane. It hurts people's pockets. It also creates a dynamic where the Fed has to continue to raise interest rates because inflation's sky high, right? But obviously with what's happened with oat futures, this devastated a company named Oatly, right? And it killed their margins, killed their profitability, killed their cash flows and everything like that. But what's going to happen with Oatly in 2023? Well, guess what? Their margins are going to get massively better. Their cash flow is going to get massively better. Their profitability is going to get massively better. They've been absolutely wrecked by the price of oats, unless, of course, the price of oats goes back to insane levels and through some sort of, insane bull cycle again. That's probably not going to play out. Let's just be honest about that. So that's going on, and this affects many different companies, right? I was looking at this economic data out of the government here, and this shows you like trucking rates, general trucking rates. And so first off, it's going down. That's good news, okay? Because trucking rates went to insane levels and basically created, once again, a dynamic of just, if you had to transport any product around the United States of America, it got ridiculously expensive, like unnaturally expensive, right? And it's coming down. So that's the good news. The data, sometimes I'm like, how's this number so much different than this number? Because here's what we're looking at from DAT here. And look at this. Like, look at just versus a year ago. And a year ago wasn't even the peak. A year ago was actually at the beginning of this year in 2022. And what you're going to see is prices are dropping off a cliff. If you need to transport goods around the United States, and I know some folks in the trucking field, and none of them have good things to say about what's going on in trucking right now. None of them. They all are like, they don't even want to talk about trucking right now. It's in a tough spot. And the worst part is we're going into Christmas time and rates are still dropping as we're going into Christmas time. Like this should definitely be a time, if anything, you see a little uptick there. And things are just continuing to get worse and worse and worse when it comes to trucking rates, right? So this is obviously devastating for trucking companies, but if you are any company that has to transport products around, this is the best thing that could ever happen to you because it's going to get much cheaper to transport goods around the United States of America. And you just look at this, it's like month after month after month after month, rates continue to drop lower and lower and lower and lower when it comes to trucking, right? And if you look at as far as ocean freight goes, the numbers continue to drop off a cliff when it comes to that as well. And they're going to fall more. It's going to fall more. Okay. That's the craziest part. Like, I heard somebody from this industry talking today and they were trying to say like, we're at a bottom or something like that. And it's like, do you know where the bottom's at? It's like at the bottom of the ocean. Okay. It's got a ways to go in this whole situation. So if you own any stock or thinking about buying any stock that has to transport product, whether it be around the United States or whether it be over the ocean, whether it be a company that imports, exports, whatever, which is a lot of companies, things are getting massively better, and you will see your company's margins increase quite dramatically between commodities coming down in a massive way, between trucking rates coming down in a massive way, and ocean freight coming down in a massive way. You will see this in your company's margins, and there's going to be a huge divergence in the market where there's going to be a ton of companies that essentially see their margins increase rapidly. And I mean rapidly in 2023. And it's going to be quarter after quarter after quarter, margin improvement, profitability improvement, cash flow improvement, quarter after quarter. There's going to be some other stocks out there and some other, companies that their margins won't get better. And the reason being is maybe if they're a company that's dependent upon people taking out loans and making a massive purchase decision, those companies will continue to falter. Their margins will actually continue to get worse. Their revenues will continue to get worse, and their cash flow will continue to get worse. And a lot of those companies have not really seen their businesses get hit as bad because they're what I call backlog companies, where it's a big purchase decision, it's on a loan, something like that, right? A home builder is a perfect example of that. It takes a while to fill that, and so the numbers look great in the short term, but what you're going to see in 2023 is every metric for those companies get continually worse, while other companies that have been wrecked this year are actually going to go from these massive headwinds against the company to massive tailwinds behind them. And you'll see their margins take off. You'll see their cash flow improve dramatically, and you'll see their profitability improve dramatically. And that's regardless of the economy. For several companies out there, there's a lot of them. So that's just something I think keep in the back of your mind and be aware of in the market kind of moving forward. So appreciate everybody joining me as always on the channel. Thank you everybody that subscribed and always tunes in for the videos. Also, we got our massive once a year Black Friday sale coming up for the private stock group to get access to the private Discord chat, all the different course curriculums and things like that. If you want to be entered in, check out pinned comment down there, and we'll go ahead and send you over the email when the deal drops on Black Friday. Much love as always, and have a great day.